Good morning, guys. How are we all doing? I am Dan from Trading with Dan. This is our Bitcoin morning update. So if you guys wouldn't mind smashing that like button, we shall go straight over to those Bitcoin 4-hour charts. Yes, so another nice leg down that we were looking at yesterday. Obviously based on just wider stock market, wider market moves. Based on, obviously, we know what we've seen this one before. We know what is going on here. But yeah, Bitcoin had that move down below our $55,000 level, not hitting to our low 50s yet. Looking to try and play out a bounce here. If it can get back above, close back above 55,000, maybe we can make our way. Well, we've either got a level here which we'll draw in a shorter time frame level of around 56,000, where we can potentially get rejected, or if we make it above there, realistically we've got a good shot of making it into the next level of resistance, which will be around the 57 to 58,500. That level, if we get back above there, things will potentially start to look good and we'll re-establish this range. But that, I mean, we pretty much all know that is only going to happen if stock markets turn around here and don't continue dumping on a new potential wave of lockdowns and all that cool stuff. But yeah, so that is literally what we are looking at here. We are looking at sort of a mini repeat of what we had on going on in that March time, nearly 2 years ago now, I guess, wasn't it? 2 years ago, in a few months next year. So yeah, I mean, not much else I can say. If stock markets recover, if things start to calm down, then we shall see what happens. We know the response. We know what happens afterwards. We know markets go on a mad one. We know there will be the opposite of tapering. They know that rates won't get increased for a long time, and obviously we will see that in the bond market rallying as well. And we just know we'll all be in for another one of those well, the rich get richer and the poor struggle with basically higher prices. We'll be in for another one of those scenarios. You kind of wonder what is the big idea here. But anyway, it is pretty simple as far as crypto is concerned. I think now we are all assets are correlated basically when it comes to events like this. So yes, all assets are correlated to liquidity basically. But yeah, here we also Ethereum. If we look at Ethereum, this is obviously quite positive. Ethereum is Satoshi pairing. Ethereum is holding up quite well, so that is not necessarily indicating that the crypto market is done and dusted. This as a potential measure of appetite for risk. Bitcoin dominance, obviously similarly, a measure of appetite for risk in the crypto market is showing that there isn't a lot of that there is obviously risk taking going on here. We are lower than this low here. We are basically approaching this support area. Get below here, things will get wet and wild in the altcoin market, and we'll start to see some mad things happen. Let's go and have a look at some of those more finance 1.0 markets. So yeah, you can see the S&P. It isn't actually a spectacular move down yet. Obviously that could change. We've got this high here which we've not even got up to yet. We could potentially see a bounce and a turnaround there, if not maybe even into this horizontal. I mean, this whole area from around 4,550 to 4,450, that $100 area for the S&P is a potential zone for this to get picked up and move onwards and upwards. Just a pullback, bro. If we also have a look, Nascoin as well, not actually doing as bad, because obviously we know Nascoin and the tech stocks do well if they potentially lock us down again. Peter Schiff though, wrecked, was looking like he was going to get a nice bounce off it and then just slammed back down. Just madness. You gotta feel sorry for the gold people. You gotta feel sorry for them. The 10-year yield obviously is indicating that rates are going to stay low for longer. We got obviously an increased chance of a recession, and yeah, things not looking good. I mean, if we lose this level, we drop back down into this area, and yeah, I mean, it just indicates a risk off. Basically, this is actually a risk off trade. This bond market can move up even if it's risk off, but at the moment it is doing what it should be. When it moves down, it is risk off. DXY easing off a little bit as well, because because we all know about the money printer go burr and all that fun stuff. Which is then potentially going to send other markets wild. But yeah, dollar easing off in the face of this, which is interesting because obviously the dollar rallying is a risk-off move, but the dollar is coming down, so it kind of sees, it kind of knows the response, it knows the playbook. So it is acting accordingly. Oil though, it is acting accordingly as it should be, getting absolutely slammed, Look at it. This is the biggest indication that we are just clearly moving off the back of potential lockdowns and things. This is the one price movement that just fully says this is what is going on. But we kind of know that anyway. But yeah, this is telling us yeah, oil getting slammed clearly if there's not really much travel or flights and stuff like that, and and the economy is going to slow down and potentially recession sooner. Then yeah, oil going to get whacked. Of which it is getting whacked. So we are at the weekend. We did close all these markets in the heat of the moment, 2 days, and they were light markets as well due to Thanksgiving. And we also have 2 days over the weekend now for people to stew and vegetate. They decide if they're going to BTFD, decide what they want to do. So next week is certainly going to be interesting. It is certainly going to be interesting. So I mean, that's all I can say. It is gonna be fun. Obviously, we do know we will turn around and go onwards to new highs. It's just the path we take. If things are bad, they're gonna start doing wild stuff, and we are gonna start doing wild stuff. If things aren't bad, then we are gonna recover normally. So I mean, number only go up, crack up, boom. I mean, we know the score. We know how it is. It's not over until the fat lady sings, and that is that. Let's have a look at stochastics. Are they going to help us get above this $56,000 level? 4 hour has a chance. Very, very deep. Just turned back up, so it can support price action here in the short term. So I mean, what you would read, at the very least, it's going to potentially hold us around $55,000. Not necessarily going to be able to push us higher. That will be down. That heavy lifting, that more heavy lifting will be down to like more medium time frame stochastics, of which the 10 hour is pointing down, so that's not in our favor. 12 hour can potentially turn up here though. So if the 12 hour gets turned up, the 10 hour will turn up, and the 4 hour get moving, and then yeah, we could get above 56, 57, maybe come and test into this level here, where it would be an opportune place for a lower high if we are going to maintain the downward trend. But however, if we do break above, and then especially above these highs here, around 59.5, then yeah, that will look very good. I think confidence will come back in the market and we'll re-establish this zone, but that is obviously a big if. Daily stochastics, let's just grab them up a sec. Daily's still down there, still deep. So ultimately, if the 10, 12, 4 hour just get us moving up, the daily can turn up from a low level, can get us moving. 2 day got very deep as well. So ultimately, at some point, it depends where from. It could be low 50s. These are going to turn back up, and we are going to get a very juicy bounce that could end up being a macro low and take us ultimately onwards and upwards to new highs. 3 day diving still. 5 day got plenty of room to run. Weekly turned down, and then obviously bi-weekly and monthly looking good. So we've always spoke about this possibility anyway of BTC coming down to the low 50s. I mean, it clearly was on the cards. Clearly was on the cards. Clearly, like we've been talking about it. A nice move down to here, maybe some wicks below, get picked up here, turn onwards, back, re-establish this zone, trading here for a bit, and then break onwards and upwards. I mean, that realistically, in the larger time frame, if you want to look at the weekly, expand this out a bit, is clearly not gonna look too bad. I mean, yeah, if you kind of just look at it, we trade just down into this level where we're looking at, turn back up, and then move onwards and upwards. I mean, it's not really a bearish looking chart, is it, to be honest? Price action holding up and maintaining near these highs, trading new highs, pulling back a bit. I mean, this is a bullish chart basically. So realistically speaking, whilst we even know what the responses are if the worst case scenario is to happen regarding the global global health situation, and then if that isn't going to be an issue, we also know onwards and upwards, onwards and upwards. So yeah, let's just not make life hard for ourselves, basically. So there we go, guys. I mean, kind of, if in doubt, zoom out. Things ain't looking too bad. If you micromanage things on the shorter term, yeah, clearly, and if you leverage up, things might be a lot more stressful for you. But if you do just look at the bigger picture, have a larger time frame view of things, then it is currently all fine and dandy. So there we go, guys. Remember, this is not financial advice. Clearly, no financial advisor says words like "it is all fine and dandy." So there we go. Always do your own research, and I shall speak to you guys soon.